Oh, let me go to GBPS. GBPY. Okay, since most of you, thanks for reaching up the advanced classes, and currently most of you I see changes in your trading. You aren't like you are not like the way you came. I hopefully if you have been following me up, I know very well that you aren't like the way you came. Things have kindly changed up. So this is going to be my last session for this mentorship class. I'm recording up so that you guys will be going into the videos, those who haven't been around, and go and learn something again where you haven't been, where you have not understood. So today I have only three uh, three three ways how to approach the market, and they are so powerful. I have two ways how to approach the market, and the last one is how to make money regarding risk to reward ratio. So first of all, we learned about SNR from the beginning, and most of you are well versed with what MSnR is. Literally, those people who are getting stuck somewhere, basically the reason why I told you that you begin with the higher time frames is for you to understand what those time frames be doing, so that you'll be well versed with the low time frame. So whenever you know what higher time frames are doing, it is easy for you to trade a 4 hour. You get trades like 5 trades on where you using only 4 hour, when as long as you know what weekly, monthly, daily are doing, so that you trade, you scalp and scalp and scalp. Though as a trader, just know not every day it will be your day. There are some days where it will be a loss, but what you have to keep in mind that we move. You have to just put that word in you. We move. One, look at the risk to reward. Look at the risk you are doing. Let me say you are doing a 10 pips stop loss, and you are going into 300 pips. You get those who trade gold and GBP JPY, because those players are familiar with such moves. So if you come across such a move and they hit your stop loss of 10 pips, imagine you say we move, you look for something else. Don't cry for the spilled milk, as that also has kept me moving. Okay, but it is so rare that in 10 setups you may find that you have lost two, so it is you're still on a winning streak. Okay, so this month I just want you guys to practice everything that we are going to learn today and what we learned previously. So you keep on practicing and applying everything on what, on charts. Then after this month, I think by next month, I'm really sure by next month, because this month has just started. When you're serious enough, by next month you'll be making something. You'll be doing at least a setup, because currently some of you have started doing setups and they are working out. So by next month you will know what you'll be looking at after this session, because this is my final session, and I'll be there receiving questions, and I answer, as well as I'll have to hold up some live sessions here as we proceed. So by the end of this year, I'm going because I just want to go silent this year. Um, that's why I have to teach this group. Then I just go off. I work on myself because I have to buy a GLE. I really love to. I'm tired of moving on foot. I want to buy a GLE. I want to buy something big. I want to at least shift up from where I am. I'm tired of being um, a regular person on this planet. Okay, so also you have to be motivated by that. So today we are going to learn how to trade breaks. For example, how to trade breaks, and what do you have to look at when a break happens. So for instance, we are learning today how to trade a break, how to trade a break, how comes up, look, how to trade a break, how to trade a break, how to trade a break. This there is a trade I got. It was on euro. it was on Euro NZD that I got, though it literally they rarely happen, but they are there. They happen a lot on these currency pairs, but on gold specifically, the normal SNR, it is the one, it is what moves GBP, JPY, and gold. It is the normal SNR that moves on each and every day. But on other pairs, you may find breaks, what and what. So what do you have to look at if a break happens for those who will be trading currency pairs? So what, for example, if we had the zone here, let me say this is my monthly. So remember, if I talk about a monthly, if I talk about a monthly area, just know you have to shift all minds on all time frames that create up a storyline. You have to move all brains to the to all time frames that create up a storyline. For example, we have a bullish gap here. I'm giving an example. We have a bullish gap there. Then we tend to get a bearish move like this. Okay, let me put this in black. Put this in black. So we tend to get a bearish move like this. So remember, as we learned, we knew very well that if an SNR is broken, we tend to have a price move to come and tap there. Then we do what? We drop. But what do you have to look at here? Remember, it is the same way as I talked that if price rejects, you go to one time frame below to look for a breakout. So for example here, if this happens, a break, for if a clear break happens here like this, you have to go on one time frame low. So on one time frame low, for example, this is a monthly area where it has broken. You go on a weekly, you may find these things have happened here on a weekly area whereby the price was breaking. You may find at this zone there is maybe a level that was created. A level on one time frame below. Let me put this. You may find like a level it was created, or else you may find a gap on one time frame. Let me say on a weekly. So this is a monthly candle, but you may find that we had a drop like price. What did the price do? One candle started one candle opened somewhere like here, it came and closed here, then another weekly candle opened from here, then it dropped, hence breaking the monthly area. But here on top here there is like a gap. So also let me say in this area there is this. So this when there is a V here, we on one time frame below, we anticipate that when price is coming back on one time frame below, we shall be playing our price from here, somewhere like that, for us to drop price again. Similar to this, you may find price came like this. Remember, when I'm teaching in a bearish way, you just verse it in a bullish way. It's just the same thing. So you may find on one time frame below we have this, okay. So since this is a monthly zone, we are expecting price to come and tap here, then we sell. But on one time frame below, you may find a candle passes through like this, then that's what goes down. So for you to trade this break, this is what you have to consider. You have to consider the formations that happen on one time frame below. You may find a gap, you may find a gap, you may find a V level that is there. So this is where you pay what? You pay your attention if there is any break. So for example, let me go back, way back in time. I show you on Euro NZD. Euro NZD. There is a setup I got, Euro NZD. Reset. Is it still around? I remember we caught this, but later they went up into our way. So this setup was okay here. So price broke. Is it this kind? Yes, it has been days. It has been days since I last traded this pair, but I think it was in this area here. Let me first remove all these drawings. Remove drawings. This is the candle that broke. It opened, then it is in line with the weekly. So people were here, were here buying, but literally this is the kind that let me go on. No, sorry, it is still on a weekly. Remember, I said that after the price breaks, you go on one time frame below, you may find a formation in after it breaking. So literally, this is the candle that did what? That broke. Okay. Just a minute. Let me come. Just a minute. Guys, just a minute. Okay. Price was here. There is a move I got. Let me first go, because I haven't subscribed to my premium yet. There is a move I got way back. It's been a while. Was it on a daily time frame? Somewhere in June, July, June. The daily. Yeah, sure, it was on a daily here. 4 hour. Yeah, it was daily and 4 hour. Remember, it has been a while. It was in August 2024. It was in August, but I really remember because I just spotted it out, then I used it. Okay, it was way back in August. So after break, I was watching these areas. I watched these two areas for price to come, because after break, remember, as I said, you may find this kind of formation. So what was I looking at here? I was looking at a rejection, breakout, then price come back into my zone. Then it is the same. It is the same what? It's the same way how we trade the normal SNR. So after you finding the time frames that do that, you after getting a break, you find the levels. As I said, it is either a V level if you're selling, and it is either a V level if you're buying, or else an A level if you're selling, or a gap, a bearish gap if you're selling, and a bullish gap if you're what? If you're buying. So literally it is the same thing. As you can see, price came here, rejected, but never broke out. So I was watching over all these levels. At least I knew that one of these levels would do what? Would hold price. So one rejected, broke, then price came back. Then this is where I got my what? My sell off. It was way back. It was really way back. So if you check in standard forex around 22nd August, you will find this setup of Euro NZD, and I got a sniper trade off here. Then it dropped, because since it was in lining with the monthly area, it came and hit TP. Then we started doing what? Since it was a daily break, let me go back. Since it was a daily break, as you can since it was a daily break, later even price came and tapped in 4 hours lining with the daily. Since it was a daily break, the nearest area of take profit, of course, it would be this. So you can see how price really rushed to our TP. Though this set it is there in standard forex around 22nd August. It is there. Those who followed, it is there. Those who were with me by that time, it is there. This is the only setup that I got for the breakout. Though I rarely trade these pairs, but when I spot it out, of course, I have to take an opportunity. But for GBP, JPY, and gold, it is the normal SNR that always happens, and most of you have witnessed that. It is the normal SNR that does what happens. But if you spot it out, of course, you have to move as a storyline indicates. Okay, hopefully there you have understood, guys. Yes?
No.
Not yet. Okay, let me repeat again. Wow, this one is dropping massively. Nice trade. I think I'm in profits already. Shengeza, hopefully all of you understand Luganda. Sagala njogera Luganda oba tolutegeera. You all understand Luganda, right?
Yeah.
Okay. So, kyengezaako otegeeza nti in areas of breaks, this happens ebiseera ebisinga nga for example obadde ne A level bagibreakinze, V level bagibreakinze, we are trading an SBR or RBS, okitegeera in an area where you don't see anything. In an area where you don't see anything, we are trading. Let me see on gold, because we had one time we had an sorry, let me use another gold. Weekly. Let me just use this. Let me use this. Let me try seeing if something happened here. I get for a picture. So here nothing happened. It was just a massive rally to the downside. Here, let me take this candle here. Okay, this is a good example, right? So you can see that after price breaking, this area, if it remember, you have ways how to do what, to trade. But remember, if in case remember Waneno, it had done a rejection, but if it was just a plain candle that had moved, remember it closed, then it did a rejection. But if this area was just a plain candle that moved and you went on a daily time frame and you found this kind of a structure, this A level, okay, if in case price had to come back, you had to consider this, not this one specifically. You had to do what, to consider this to start up or what, a storyline. Okay, it is what I'm meaning. Kyewandikozesezza finding another storyline to sell the price. Let me delete this. Oyinza ogenda ku monthly nosanga price yakoze bino bweki. Sorry. Yakoze bweki. This is just minor, but you have to know it. This is just minor because what I use mostly is coming, but you have to know this. I don't sagala mbalekereyo. So if something happens like this, remember I said this was support. I mean resistance has become support. So how do you trade when price comes back here? You know how SBRs are formed. So if this is a daily, and you are waiting for price to come back and tap here, okay, yes, it can come, you can be on a daily time frame, then it taps, it breaks out, then it moves. But in most cases, for you to get the whole candle, to get that sniper from here, as you head with it to break that, because remember there are scenarios where price breaks and just does what, continues. So I'm teaching you how to tap to catch up that small that drop off, then you move with it to break, so that even if it doesn't come back when you are done, when you are already what, when you are already inside. Okay, so you go on a 4 hour, you go on a 4 hour. On a 4 hour, you will find something like this. Price was buying, price was buying, then it led what, to break. So you, since this is a, now this is the daily, the 4 hour looks like this. If you find any gaps there, so literally when price has to come back to activate these orders, you may take this, okay, to start a storyline from these areas, these ones. You look at 4 hours, so that when price, you know very well that it has broken, it is now bullish, it is just coming back to tap into the area, then it does what, it buys. So remember, when price moves down, it is selling, so it has to confirm on low time frame that we have shifted, so that we do what, we start buying. So when these are the areas where you do what, you have to look at, or else you may find something like this. You may find something like this. This candle goes, leaves a wick, there, then this candle opens, for example here, there like that. Then another candle does this. Remember, this is a bearish candle. This one is a black candle. So this is the V level that you'll be looking at on 4-hour for price to come under, does a rejection, breaks out on 1 hour, then it returns back, it buys to go and do what? Remember, it has done a daily reject daily, but it is still in what? In the hours, in the areas of 4 hours. So you start doing a 4 hour reject, 4 hour, 1 hour breakout, come to entry, you enter, you place in your buys. So by the time it goes to break this area, you're already what? You're already inside. This is where you may find that price has tapped there, confirmed buys, you're already buying, and most of the people are waiting for price to do what? To break this area, but you're already what? You're already inside. This is where you may find that price doesn't do what? Come back to activate your orders at sometimes. So you have entered, so your take profit is here, as they are going to do what? To take to break this area for maybe to anticipate that they may come back and activate more orders here. But in most cases they may not do what? They may not come back, as you saw on Euro NZ. They rarely do what? Come back after they reject daily, but after a break, after an SBR happens or RBS happens. So when price comes back the first time, that's why you have to utilize the one time frame below. You do a storyline of that, you enter, they go and break again. Oba Muntegede, have you understood?
Yes,
Yeah.
that we
Yeah.
understand it.
You have understood,
Yeah.
right? Okay,
Mm.
okay. So that happens on all breaks. So that's what you have to first look at. If in case there is no what, there is no any rejection when it is let me say it is a plain area, you don't expect, you are not seeing anything there, or else you have seen something there, but you have to follow the rules of what? Of SNR. So let's remove that. We move on to something else. Let me reset this. Let me see. Yeah, this thing has surprised me a lot. I'm loving it. I'm really loving it. So let me see. Not bad, but I'm anticipating something like 200 pips or even 300 pips, because I'm anticipating a sell-off, because most time frames are selling. So I'm anticipating sell-offs. Even in I will go and check DXY to anticipate the on what? On Thursday I will anticipate the move of NFP. So let's be patient. Okay, let's look at something else. The entry that I used here, you may be asking, which entry did I use here? Yes, it is so simple, and this happens on a daily. So this one, if you are a scalper, if you are an intraday, if you're a swinger, it is sweet for you. But currently we haven't introduced a swinger setup yet. When you are trading this kind of concept, it is called a BPE. It is called a BPE. Okay, a BPE. What BPE stands for? It stands for break, pullback, entry. Okay, break, pullback, entry. For example, you have your area of interest. It is just the same thing. Don't say that it is hard. Just the same thing. You have your area of interest. This is another type of entry that you have to consider, but for it, it also has different what? Different rules, and it has different rules. So, for example, if the price rejects, breaks out, then breaks out, pull back, then entry. It's what it is what it means. It rejects, breakout, breaks out, a pullback, enter, then we drop. It is the same. It is the concept that I have used here. So how does it work? Let me delete this. So this is how it is the same SNR, nothing different. Okay. So one, its criteria. For example, if you're dealing specifically, this goes on the day after you understanding what monthly, weekly, and daily are doing. Okay, so specifically this goes to scalpers or intradays, of course. So, for example, if daily has rejected or 4 hour has rejected, uh, or else you have understood what these time frames are doing. So basically, this one goes to people who trade daily, 4 hour, daily and 4 hour. So, for example, if daily rejects, this one implies on two time frames. Okay, if daily rejects, let me say daily has rejected and 4 hour breaks out. So this might be the 4 hour, but why should I use candlesticks? Let me go on the real chart. Let me go on a real chart. This one they hit us out, but let me use the current move because we know we are currently kind of selling. But remember, okay, here we had the rejection, 4 hour reject 4 hours. So this is the candle that did the rejection, right? Then 1 hour broke out. Here the rule implies, if you're trading BPE, the rule implies instead of you marking the candle body, you have to mark also the candle what? The candle wicks. This one is similar to engulfing type of entry, but it is better. It is similar to engulfing type of entry, but it is also better. This one is much better. So rejection. Remember, it is a 4 hour that rejected. Rejection. 1 hour breaks out. So you stay on what? You stay on that time frame that led to the breakout. You mark your areas. You mark the V, the A levels. Let me give an example. If here there was a V level that was broken, you mark it. Then inside here you mark the A levels and A levels and A levels and the gaps that are in there. So for example, we have here what we only have, and remember they have to be what? They have to be fresh. Okay, they have to be fresh. So sometimes they may go and activate us from these the MTFs that we do, the upper MTFs that we do. Of course, the price can come and react from all these areas, but literally you have also to look into this because somebody who did an MTF here would have missed the what? This sell off. Okay, let me go back. So what are the rules here? After 1 hour breaking out, you mark your areas of interest. As I said, the V, the A, and if any gap is there. So what do you look at when price comes back? When price is approaching your area of entry, you go on 5 minutes. What are you watching here? You are watching the 5 minutes rejection. You are watching the 5 minutes rejection. After 5 minutes rejecting, okay, the same area where price rejected, and this 5 minutes candle, as you can see it rejected, right? So this one implies for those people who want to do what, to trade very early, but literally sometimes it gives sniper entries, but but those who have smaller capital shouldn't go much into this. Okay, but it's also good, it can give you sniper entries. Remember, this one goes to 30 pips stop loss. So imagine you look at the first candle, the 5 minutes candle that is going to do what happen. One, the 5 minutes candle has to reject, okay, and its closure has to close bullish. If you are going to sell, it has to remain bullish. Then you wait. That's the same area, the same MSnR area that price rejected from. It's where you do what? It's where you put your sell limits or buy limits. Like as you can see, you put here your limits. It rejected, you put here your limits, and your stop loss, it is in what? It is in 30 pips. Maximum, minimum 20, but on a safe side, because of the spread, you put them on in 30 pips. Then you go back on a time frame that led to the what? To the break. Okay. The first area for your take profit, it is this. Remember, it is a 4 hour. Remember that it's kind of scalp. So you move there, then you be like, you go back on 5 minutes. Be like, I'm selling from here 30 pips, and I'm taking it there. Or else even if 20 pips, okay, 1 to 3. I will teach you how to make money off this kind of setups, So that's how to trade BPE daily 4 hour, literally daily and 4 hour. It is the same scenario. So when daily rejects and 4 hour breaks, you mark the areas of 4 hour. Then you wait for 15 minutes to reject. Then on that very area, it's where you do what? You put your limits. Okay. Then how do we make money off this kind of setup? Because this one has also rules. One, its TP is not very far. Okay, its take profit is not very far. And number two, you have to also learn reward to risk, RR. You have to learn those reward to risk. For example, if in case you entered from here and you have you are planning to risk, let me say $50, and you are entering a 5 lot size, not a 5, a 0.3. Instead of you entering the whole of 0.3, what do? You enter 0.1 3 times. So when price moves your way, so for example, it moves, so your entry is there. So when your trade moves, let me say, literally, ekinene nnyo 30 what? 30 pips. Okay, or 40 pips. If it moves 40 pips, you remove two positions. Then you leave one position to run with a stop loss above here. You don't set what? You don't set break even. So if in case price comes and takes you out, you remain on a safer side. Why? Because this would be 80 pips minus 30 pips that were here, minus 30 pips. Those are, you're remaining with 50. You're remaining with 50 pips. Okay, you understand how to make money out of this setup. You're remaining with 50 pips, and you have lost 30 pips. So that means you're remaining on a winning strike. Are you getting my point? This happens if in case price comes and taps and drops. But sometimes if it just goes and hits your TP, you move on. You know that it happens. You just move on. You understand? Reason being, price can do something like this. It doesn't come and hit you out, or else you have set here your break even. They hit your break even and you move out, and later price just do what? Drops massively. Okay, that's why I emphasize taking partials. This is how I take partials, and I be on a winning side. And even if they hit my stop loss, I'm still on a winning side. Okay, or else you can remove one position. You can remove one position for the stop loss that might happen here. Then you reduce the stop loss. You reduce the stop loss. Then one position you leave it, the hit take profit. Then another one you hold. you're getting my point, guys. You're
Yeah.
getting my point.
Yeah.
Then the last rule, the crucial rule is, let me go here on 1 hour. Let me go on 1 hour. And for you to be so affirmative that this price will move down massively, you see this candle, you see this one candle move, okay? So this one is a risk setup, though it is running under what our criteria, but it is a risky setup. Why? When you're trading BPE, you should not get this massive candle break. You should not get this one single massive candle break. It has to create momentum, like to create several candles, even if they are 3 or 2, as long as they are created. This one candle like this, it can give you confirmation, and everything you sell, it gives you some money, then later it comes and takes you out. The better move, it is this one, as you can see, that happened here. This is FXM, so it happened on no wonder, because the forex brokers that you have to use, it is the Owanda and Saxo. Those ones are better. You choose any that you would prefer to use. So this is Owanda. Okay. So let me remove this. Let me see. Is this the, yeah, it's the one I'm using. Let me just, okay, it is okay. Let me delete. It is me who made the setup. Nobody made it for me. So even if I remove this, then I show you some example. Move drawings. What is this again? Move drawings. So remember, last time we're in this area here. So basically I was looking at the 4 hour. First of all, it broke here. So you can see this, what I was telling you, this price, since this is a 1 hour, price can come. This is a V level and A level in the same area. So the first one that I told you, but price never did what? Literally never came back for our entry, which is okay. We use another way. Because the gold specifically uses the normal SNR. Let me go on for what we are learning. Reset. So here we are. Price came and rejected. As you can see, these are the candle moves that I want. At least 1, 2, 3, you see, and the 4 and 4. This is the fourth candle that broke. So these candles give, is it really here? No. Let me do it again. Not there. Because I remember the entry was this. This was the entry. Here. Price rejected. Here like that. It bought, went and rejected, and it broke out of this candle. At least 2 candles, as you can see. The break. This was the break that happened. So here you mark your areas of interest. Here you mark your areas of interest. On 1 hour, we have this. we have this. Okay, somebody might ask, why don't you why don't you use this one? This one I would have used it, yes, but this area that formed here, it is what led to the break. It is the nearest area that led to the break. So this is where you get the word I told, as I talked about last time, that you look the nearest engulfing that did what led to the break. Okay, so if something happens like this, what you have to consider, if it doesn't come clear like this, okay, if it doesn't come clear like this, as you can see, there is nothing, there is only this level that went up. If it comes in if it happens something like this, we have this area, we have this area, you look for the nearest engulfing that led to the what, to the break after the rejection. Okay, it's what you look at, then you mark those areas, because remember here we have two areas, we have the V level and the A level. You mark them. If there is a gap here, of course, you also do what, you have also to mark that gap area. So you move, or you go on 5 minutes. What are you looking for 5 minutes there? You're looking for confirmations. As you can see, as you can see, the first candle came, rejected, it went, became still what, bearish. Okay, so this was a risky area to enter from, but if we could see in 5 minutes, we also had the same what, the same area there, another area in 5 minutes, the nearest area that might have led to this push up. But as traders, we are all risk what, we are risk takers. So after anything happens like this, after a rejection, okay, but it will be so much affirmative when this candle remains what, remains bullish. But how do you take trades if this candle doesn't remain bullish? I'll also tell you that. So this candle did what, rejected, so you leave this pair, you leave it, you look for, you go back on time frame higher than 5 minutes, you go on 15 minutes, you look its candle closure, you wait for its candle what, you wait for its candle closure. So as you can see, what did the 15 minutes do? 15 minutes rejected, but it remained what, it remained bullish. So it is still a what, a strong area to sell from. So you put your sell limits, then what's your risk? It is minimum, it is in most cases it is 10 pips, but me, I prefer at least putting it at if you find this zone is up there like that, at least you put it at 15 pips or less, maximally 20 pips SL. But me, last time I was using MTF, that's why I missed this trade here, but it was a BPE, area of entry. So how I'm going to show you how we shall be using BPE and MTF all together combined, so that we don't miss any entry. So here we had an entry, sell off. It is the same scenario as I told you. When price goes, let me say you're planning to enter 0.4, you enter 0.2 two times, one with the break, one you'll move it out. Let me say you'll move it out at 1 to 3 RR, so that by the time if they come to hit you out at another one remaining, the 20 pips, you know very well that you made 60 pips. So when they move you out, the 20 pips will cover the loss and the commission you get. So in most cases, what you have to put in consideration is the RR and the what, the why guys, are you on?
Yeah.
Okay, you're seeing my screen, right?
Yeah.
Okay, So what you have to put in consideration is what you're losing and your take your break even. So this is how people take break even. The break even is taken, you don't press all the lots in. No, what you do, is you, if your risk, remember, after you doing analysis, price hasn't come back to your area of entry. So instead of waiting for price to come and tap your area of entry, then you sell. What you do is you sit back, then you calculate your risk. You be like, okay, I'm planning to risk $50. How many how many positions, if in case I have a 20 pips stop loss, how many positions will be in that 20 pips stop loss, so that I enter that. So for example, if it is 0.2, you'll be like, it is 0.2. Okay, I will enter 0.025 times, okay, or 10 times. After calculating that, when price hits 1 to 5, I'll move out. I will move out 5 positions. I remain with another 5. So the stop loss of the remaining 5 remains up here. You don't move it. So so that you just cater for these pullbacks that happen. As you can see, the pullbacks that happen, remember, at sometimes price can come and deceive you, then just spikes down. As you can see, it spiked down and hit my tip up to something like, as you can see, 300 pips, 16 RR, you get. So this is what you have to put all the time in consideration when you're trading, where you're going to take your partials and leave the rest to run to your final take profit. So since this was a daily time frame, where is your take profit? Of course, it was a 4-hour, right? So this was your take profit area here. So this was your take profit area. But if you look on a daily time frame, that if this was the area that was broken, so it is also aligning together with the remaining zones in 4 hour. So and you can see that we left here a gap. Literally, price may spike in and comes here. So I had a setup here for buys, but they took me out. I had the buy setup here, but they took me out with such spikes, with this spike here that came in. So you be well versed that, okay, I'll be holding my position to 16 RR, just one trade a week or even 2 trades a week. Then you'll be like me, I'll be stopping there. So the first candle sold, you took out your what? You take profit here at 1 to 8 or even 1 to 5. You'll be like, if price hits 1 to 5 RR, I'm moving out. Okay? If you're using 20 pips, of course, it will be 100 pips. You have risked 20 pips. If price hits, let me say you have entered 0.2, then 0.1. Remember, you haven't entered all together. Or else you can be like, I'm entering 0.1, 2 times for it to make 0.2. So you set your limits and your stop loss. So when price comes and hits 1 to 5, okay, you know very well that the remaining order, it is remaining up here at 20 pips stop loss. So even if price comes and hits the stop loss, I will be in an 80 pip profit. As you keep on holding, you may find that price, it just pumps to your final destination. You may find yourself you have moved out with something like 80 pips, then another setup gave you 300 what? 300 pips. So which will come to something like 400 pips in just one setup. Okay, is this 400 pips? 100, yes, 100 plus this, you would have made yourself 400 pips. So one setup gave you 16R, then another one gave you 5R. What have you made? Haven't you made 20R already? Okay. Have you guys understood that? How to make money out of risk to reward and BPE setup?
Yeah.
These things move together. I move with them together. It is just the same SNR. Okay, it is just the same SNR. So for example, here the first TP is taken. Why? For our the nearest area to take TP, it is this one. So for our the partials are already what? Are already taken. So even if price comes and takes me out, I'm still on a winning streak. Okay. So what do I have to look at, to observe here? If price closes, if this 1 hour candle closes up here, I'll mark my areas here. I'll mark my area because this is the only area that is there. So I'll be monitoring this area. And if I'll be monitoring this area for 5 minutes to come and tap. After breaking here, come and tap and gives me confirmation as I said, then I do what? I buy. And if price moves out, doesn't do that rule, what's the last rule that I will do? It is just to MTF, to 5 minutes. Then I just enter price from here. If the other rules remain, then MTF enters in. That's what I use on a daily basis for me not to miss out my areas of interest. Okay. So if BPE fails, of course I'll be waiting for just like to put it there, then I just enter my lot. What's the risk? 5 pips stop loss. I said I say after BPE fails, then I just what? Wait. 16 RR, 800 pips, then I just be waiting there like that. Since it is a 4-hour area, the nearest area that will be created, it is where I will put my take profit. Understood?
Yeah.
Yeah, that is it, guys. So how to make money? I have told you how to make money and how to trade BPE. Just go practice that, and things will be so fine for you guys. Have a good day. Have a good day. And I think this was my quick class and the last class for this mentorship class. So guys, practice by next month. I know if you put everything to work, by next month everything will be kawa. Okay.
Okay.
Yes, you have any questions? Yes, please.
What about the engulfing entries?
I said BPE is similar to engulfing entries. So for example, price rejected and broke out here on 1 hour. You look at the nearest what? You look at the nearest engulfing that led to the what? To the breakout. So this is it, right? This is the engulfing area. It is just the same, okay? For it, its difference is you monitor this low, and you monitor this what? These zones that were created inside here. These fresh areas here that were created inside here. So if you just remove this, it is just the same thing. Okay? It's just the same thing. Here we modified for it to be simple to run into our way of trading, that instead of you marking the whole thing, the whole cardboard, the whole candle, you just mark the areas, the SNR areas, the fresh SNR areas that are there. Then you wait for the confirmation on 5 minutes, then you set your limits. Answered your question?
Yes.
Yeah, that is it. Any more questions? Hmm? Any more questions? Raymond. Raymond.
Yes.
Any question? Go ota katari onsinga na command. Nsaba ko ku mentorship.